Hi, this is Chris German, and welcome back to the Apartment Dealer Show. Today I'm going to share with you live footage from my most recent Apartment Owners Educational Luncheon. Now, to give you some background, twice annually we invite about a couple hundred multifamily investors like you to hear from professionals that from all facets of multifamily ownership, whether it's legal, financial, market forecasting, taxation, market dynamics, and all the rest. But today, we're going to share with you one segment. And the first segment I wanted to share with you was with respect to commercial financing. Why? Because commercial financing, commercial loans, interest rates are having the biggest effect on apartment values, the biggest impact on apartment values outside of any other component that you could point to. Now, the gentleman who you'll hear speaking is Mr. Gil Figueroa. Gil has been involved in commercial lending for nearly 3 decades now. And the reason why you should care what Gil has to say is that for several years, presenting at our event, he has been able to accurately predict the trajectory of interest rates. And that's been very important. Sharing with people, maybe you should lock your rate, float your rate, should you refinance, what are the different loan products that are available? He is a storehouse of knowledge, but I want you to key in on what he has to say about interest rates because it is going to impact you, your assets, and the market come 2024. Let's go to that footage now.
I've been around a long time, 30 years in the business. I was taller and skinnier then. The business beats you up. It's a tough business, needless to say. We're a broker. So the great thing about a broker that knows lenders' guidelines is, in essence, I feel like we're a direct lender to 100 lenders because I know exactly what they're looking for. I know their appetite. I know what debt service. I know what they're going to be good at, what they're going to be bad at. I can place a loan with 100 different lenders. Okay. Sometimes it's a credit union that has the best rates, and sometimes it's a life insurance company. So it's our job to find it. The beauty of it is that we have that liberty to search. Is refinancing now a good idea? Well, how many of you, by raise of hands, have refinanced in the last 5 or 7 years? Okay. So chances are these loans are going to do what? Adjust. What are they going to adjust to? Well, the standard product out there now, we no longer have LIBOR. Now we have SOFR, S-O-F-R, and that index currently today is at 5.3. Most banks' margins are between 2.5% and 3%. So if we're going to adjust, we're going to go to 7.5 to 8, almost 8.5. So if you do nothing right now and don't refi now, this is your future. Okay, this is where it would adjust and it's going to hurt. Okay, these are realities. So this is where short-term loans are for all banks. All banks have pretty much turned over to the SOFR product. Okay, so we know what your situation is coming. This is the reality of what you're doing. Do you need a game plan for the future? Absolutely. When you bought that property at 3.5 or 4% and it penciled, I guarantee you it won't pencil at 8. Okay, so you need a game plan. You need to understand what's coming, adjust accordingly. Have a game plan. Do you have to sell? Maybe that's a game plan. Or refinance and, improve your situation right now? I would. Deepan mentioned that 2 years ago at a seminar, I said rates were going to go up. Now, this was October of 21, okay? I've been analyzing interest rates from the very beginning of my career, since 30 years ago. And I did very well with it. And I became kind of an addict, so to speak. My wife thinks I'm nuts. I'm looking at these charts daily, almost every 5 minutes. So she doesn't like me very much. So with that being said, I said that if we break, that channel is a 24-year channel. 24 years, the rate stayed in that little river going down. Everybody see that? Okay. So I said, hey, if we break this channel, rates are going to go up sharply. When I said that, people thought I was crazy. The rates were 3.5. What are you saying, Gil? I'm saying we're going to adjust. Now, when that channel breaks, Notice the next channel up, where it lands in the 5s. That's where we're headed. This was in August 4th of 2022. We had an inflection point. I called all my agents. I emailed a bunch of agents, obviously Chris, and let them know, hey, we're at a 2.5 treasury. In the next month or two, we'll be at 4. Everybody thought I was nuts, okay? I said, it's going to move, and it's going to move hard and now. This is an email that I sent to everybody, okay? And I told everybody rates would go. I locked my portfolio. I called my clients. I said, you need to refi now. Let's lock it now. Let's not wait. What happened? Okay, so this is where we're at now, guys. So we broke that channel, didn't we? See that channel? It's broken, clearly broken. Now, you see the bottom, that first little arrow on the bottom, that was October 21st when I said rates were going to go up. Okay, did they go up? Then the next channel is the inflection point. That's when I send that email in August of 22. When I said, it's time to do locks now. We're headed up. We're headed to 4. Where did it go? 4. Now, what does 4 mean? Well, 4 treasury means that banks usually charge 2.5% or 3% over. So a 2.5% 4 treasury drove us from a rate of 5 to 6.5. Well, 3, because we hit it in October. Okay. So that being said, that's where this market's headed. Now, where are we headed and what's our future? Our future's at that top box, next target, minimum. Did you hear what I said? Minimum. We're headed to 5. So that means rates will be 7.5 to 8. Then they're not there yet. Now's the time to refi. Are they there on your adjustment short-term loan that the bank gives you automatically? They're already there. Okay. Why are they higher than? Because we have what's called an inverted yield. So an inverted yield means that short-term rates are higher than long-term rates. That's why if you do nothing and you let the bank just adjust, it's going to be higher than a refi now. Future investment strategies. Chris showed you how to double your income, cash flowing and property. If we know rates are going up to potentially 8%, do you need to increase your cash flow now? Do you need to understand where you're at right now as far as cash flow? Can you weather the storm? Everyone has to really pull out a yellow sheet and start running the numbers. What's my cash flow now? What if I had to take an 8% rate? What would my cash flow be then? Will I be losing money? How long can I sustain losing money? Do I want to lose money? Should I do a different strategy? Should I sell? Should I try to refi? Okay. What do I do? Standing still is an action. Okay. That is an action. So not doing anything is a negative action. Doing something, refinancing, planning, selling, doing something is a positive action. Now, a lot of people say, well, how could I sell and then buy? Well, if you buy a value add deal and you do the same thing Chris did, that's a fantastic plan because you're doing what? You're doubling your income, or you're at least ingressing your income much further than what the increases in rates to damage you. So my point is, you have to offset the reality of our future losses with current gains in a strategy right now. Okay. Also, one thing that was said about the DST, I'm somewhat familiar with the DST. You could also sell now, sit at DST for 2 or 3 years, watch the environment, and get out of the DST and back to multifamily. I don't think that was said, but there could be an opportunity about that. So something to consider. So my point is it time to have a strategy? It's time. Are we headed for harder times as far as rates are concerned? Yes. What's going to happen in our market? Until now, our prices have not been really affected. Why? Supply and demand. Everyone's been able to weather the storm, and products are not on the street. So there's not much competition. Okay. What happens when 5,000 loans reset at 8%? Do you think there are going to be a lot of sellers? Yes. What happens to your values? they move. So there's some reality calls, and I hope I'm not being too harsh, but I'd rather be harsh and you tell me later on, hey, Gil, you were right, man. You told me what to do. I appreciate you. You gave me good information. So with that being said, thank you and appreciate to be here.